Hi there, welcome to Kneppyinvests. Continuing on in my September quarter Appendix 4C video series, today I'll be looking at Zoono. I do have a bit of a love-hate relationship with this company. Sometimes I hate Zoono, sometimes I love this company. And right now I am a little bit indifferent about Zoono. And the reasons I am a little bit indifferent is because there is a fair bit of negative sentiment in regards to this company, although you could argue that negative sentiment is trying to turn around. And I think one of the reasons it's trying to turn around is because of a good September quarter results. Share price rose 27% on the back of Zoono releasing these results. And because I think there is potential value at current share prices. Now, Zoono was a beneficiary of the COVID-19 pandemic. However, in saying that, the inflection point for this company happened about 4 or 5 months before the pandemic in October 2019, when Zoono released their Appendix 4C for the September quarter of that financial year. The share price was about 8 cents the day before they released that Appendix 4C. They were operational cash flow positive for that quarter, and the market absolutely loved that they were operational cash flow positive. I think the share price rose something like 35% on the day they released that Appendix 4C, and then just kept on rising up until the COVID-19 pandemic, and then it kept on rising because this company and what they sell was very beneficial for the business. But just like many other companies that were beneficiaries of the pandemic, you could sort of say it was just a sugar hit. And most sugar hits wear away. And when sugar hits wear away, there are bad effects. And that definitely happened with Zoono. And I'll show you the cash receipts history for this company. And you'll see a massive spike in the receipts and then a massive drop. And when you see that massive drop in the receipts, a lot of negative sentiment came into this business because there would have been some people out there, some investors who would have expected the good times to keep on rolling. And when those good times didn't keep on rolling, they became negative about this company. And that negative sentiment has lasted till now. And I could say right now, there is potential that sentiment is starting to shift again. Zoono manufactures and sells antibacterial products like hand sanitizers, surface sanitizers, and antibacterial wipes. So you can see why this company would be a major beneficiary of the pandemic. So around March, April of 2020, everyone wanted these sort of products. So everyone was stocking up, business was stocking up, and that was the sugar hit for Zoono. But because everyone was stocking up, eventually the demand for Zoono's products just fell away. And when it fell away, the sales of this company's products fell away with it. And that's why a lot of negative sentiment came into this business and drove the share price down a fair bit. And we'll look at the chart and look at the cash receipts to see the effects of that sugar hit and the effects of when that sugar hit just wore away. Zoono was founded in 2007 by a guy called Paul Hislop. He's still around. He's also the CEO and managing director of Zoono. He also has a 36.1% stake in this company. That's definitely skin in the game, and there's a lot of investors out there who are looking for management with skin in the game because they believe when management do have skin in the game, their interests are aligned with shareholders. Zoono listed on the ASX 9th of May 2017 via Gold Search. So this was a backdoor listing. If you do Google Zoono's listing, you probably come up with something like 2003 or 4, and that's when Gold Search would have listed on the ASX, not Zoono. One of the major shareholders of Zoono is Regal Funds. They have a 10.1% stake in this company. And the current market cap of Zoono at 46 cents is only $76 million. That's quite a bit lower than it was about a year ago. And the ticker code for Zoono is ZNO. Before we have a look at Zoono's June and September Appendix 4Cs, I just wanted to look at the financial year 21 numbers. If I told any Zoono shareholders 2 years ago, prior to the pandemic, whether they would be happy or disappointed with the following numbers, more than likely they would have been absolutely thrilled. The Zoono had $27.1 million of revenue. They were operational cash flow positive by $1.5 million and were profitable by 4.6 million. They would have been absolutely thrilled with those numbers. But when you compare those numbers to financial year 20, when Zoono was a beneficiary of the pandemic, all those numbers are down. And that's why, again, there's a bit of negative sentiment around this company. Revenue has fallen from 38.3 million to 27.1 million. Operational cash flow has dropped off a cliff from 8.1 million to 1.5 million. And the same thing can be said about profit after tax, falling from 16.7 million to 4.6 million. And more than likely, those numbers will probably be the worst this company will experience over the next few years, because I think there are signs that the company is turning things around. They have $5 million of net cash, and when you do look at some of the valuation metrics, particularly the enterprise value to operational cash flow, it seems a little bit high at 48, but again, operational cash flow is only 1.5. If you take financial year 20 numbers of 8.1 million, you get a much lower number, less than 10 in fact. PE ratio 16.5, that's not too high for a company that could have significantly higher profits and operational cash flow in the future, and the price to sales ratio is not too high either at 2.8. Now let's turn our attention to the June quarter results, and this was a disappointing quarter for a number of reasons. The main reason was that this company was highly operational cash flow negative for the quarter by $3 million. Not only that, receipts on customers at $3.1 million was less than the product manufacturing operating cost, which was $3.1 million. I'm not sure why the product manufacturing operating costs were higher than the receipts on customers. This was an outlier to their previous quarters, and I'll talk about that in a few slides. But the market did not like this quarter results because they were operational cash flow negative, and we did see the share price fall. Now, because they were operational cash flow positive or negative, they did lose cash in the quarter, and cash on hand fell from 6.8 million to 4.9 million. As we focus on the September quarter results for Zoono, it's pretty understandable why the market loved these results and the share price rose 27%. Zoono was operational cash flow positive for the September quarter by $2.1 million, a significant increase from the previous quarter. So let's have a look at some of the numbers and figure out why this company was operational cash flow positive for this quarter. Well, receipts from customers grew from $3.1 million to $4.9 million. That's a big tick. Now, the big reason, or one of the big reasons why this company was operational cash flow positive for this quarter, was the fact that product manufacturing operating costs dropped $2.1 million from $3 million to only $970,000. I do find that quite odd that product manufacturing was very low for this quarter. They also paid $500,000 in income taxes. They increased administration costs by $1 million to $1.5 million. But overall, the company was operational cash flow positive by $2.1 million. And that's why the market absolutely loved these quarterly results from Zoono and why the share price rose 27%. Now, they don't spend a lot of money in investing and financing activities, so all that cash flow went to the bottom line, and the company increased the cash on hand from $4.9 million to $7 million. One thing I like to do for all companies on the ASX, not only those companies that release Appendix 4Cs and 5Bs, is to look at receipts history or revenue history through time. I want to invest in companies that can grow their revenue, grow their receipts. That's one of the major factors I take into account when I'm thinking of buying into a company. And when you look at the cash receipts history for Zoono, definitely through time they have grown. But the main thing you take away from the receipts history is how this company was positively affected by the pandemic. Receipts the quarter prior to the pandemic was only $590,000. And then the first quarter of the pandemic, receipts grew to $9.9 million. That's the March quarter of 2020. Then receipts grew again to $19.8 million in the June quarter of the same year. And from that peak in receipts of $19.8 million, we have seen them fall away because those two quarters, that's when everyone was stocking up on Zoono products. So obviously and naturally, receipts will fall away as no one needs to buy any more of their products. But we have potentially seen receipts starting to level off. A little bit of lumpiness, but the June quarter receipts of 3.1 million is potentially the low in Zoono's cash receipts. And maybe we have seen receipts starting to grow from here. I would like to see a bit of confirmation before we can definitely say receipts are starting to grow again. And preferably, I'd like to see at least 2 more quarters of a growth in receipts from here. So that's the December quarter and then the March quarter of calendar year 2022. One of the first things I noticed when I looked at the June quarter results were manufacturing costs and operating costs were higher than cash receipts. I want to know if that was normal or abnormal for Zoono. So in this slide here, I'm comparing cash receipts to product manufacturing operating costs. And typically, product manufacturing operating costs is significantly lower than the cash receipts, apart from the June quarter of this year, when receipts and that cost were almost identical. So the main concern I had for the September quarter this year was that product manufacturing costs had fallen away to less than $1 million. I thought that was really odd, but when you look at this, it's not that odd. And I think what they've done is they spent a lot of money in the June quarter to manufacture products, and they've got enough products on hand to supply the demand for the next few quarters, for at least this quarter and maybe the next few quarters after this. And last thing I want to do, of course, is look at Zoono's share price chart. Absolutely fascinating chart. 2-year daily chart going all the way back to October 2019, when the share price broke out after the company released their Appendix 4C for the September quarter of that year. Share price was 8 cents. Share price increased 35% the day they released that Appendix 4C, and then just kept on climbing. In fact, it rose all the way from that 8 cents to a high of about 65 cents just prior to the pandemic. So you can see there was a lot of excitement in this company prior to the pandemic. And then the pandemic hit and the share price absolutely took off from about 50 cents or just below 50 cents all the way to a high of $3.25, which was reached in July of 2020. And the share price high was, or did coincide with the record receipts, which was recorded for the June quarter of last year. Now, from that high of $3.25, a lot of negative sentiment has come into this business as receipts fell away, and that's why the share price has moved into a downtrend, a long-term downtrend, with the share price falling from $3.25 to a low of 37.5 cents. And as the share price keeps on dropping, you're going to have a lot of shareholders out there who have bought in at much higher prices in the past year who just need to sell out. And they're just waiting for the share price to rise a little bit so they can sell out at near neutral levels. And that's called resistance. Now, a positive thing, after they released the September quarter and the share price did rise 27%, we haven't seen much selling, and the share price has gone sideways around 46, 47 cents. That's really healthy. It's a consolidation period. And if we start to see the share price rise from around 46 or 47 cents, that could be a sign that this downtrend in Zoono's share price has come to an end. That's all I have for this September quarter Appendix 4C video for Zoono. Share price increasing 27% on the back of the release of this quarter report. The market loved it. Did you love it? I was sort of indifferent about this report. I want to see a bit of confirmation that the business has turned things around, that receipts are starting to grow, and then I'd also like to see the share price move into an uptrend before I take a substantial position in this company. If you think differently than I do, leave your thoughts, your opinions, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.